Hey everyone, ready to dive into something interesting today? We're tackling crypto margin and leverage trading. And I know, it can feel like you need a whole glossary just to understand what people are talking about, but we're going to break it all down, make it crystal clear.
It really is easy to get caught up in the jargon, isn't it?
Totally. And one thing that always trips people up is this idea of leverage being like, just another loan.
Right. You see that everywhere.
But the article you sent us really debunks that myth, and we're
Yeah.
going to unpack exactly why.
Yeah, it's definitely a misconception we hear a lot.
So even before we get into the nitty-gritty, I think it's important to address this, what's with people using margin trading and leverage trading as if they're the same thing.
Yeah, at a glance, they might seem similar, but when you really start digging into the mechanics, those subtle differences, that's where it gets really interesting.
Exactly. It's like thinking, oh, espresso, drip coffee, same difference, right? No, not quite. Especially in the crypto market, which, as we all know, can be a bit of a roller coaster.
To say the least, volatility is the name of the game.
Exactly. So let's start with the basics. When we say margin trading in the context of crypto, what are we actually talking about here?
So basically, it's like you're putting up some of your existing crypto, let's say Bitcoin, as collateral.
Okay, so like putting skin in the game.
Exactly. And this lets you access more buying power on an exchange. It's not about borrowing money per se, but rather you're using what you already have to make potentially larger trades.
Okay, so we're leveraging our existing assets to amplify our buying power. Got it. But then where does the whole leverage part come into play?
All right, so leverage is like a multiplier on your position.
Yeah.
Let's say you have $1,000 worth of Bitcoin. You decide to use 10x leverage.
Okay, things are getting interesting.
You're essentially now controlling a position worth $10,000.
Wait, so even though I only put in $1,000, I'm playing with $10,000. How does that even work?
That's the power of leverage. Now, if Bitcoin goes up even a little, say 5%, you're making that 5% on the $10,000, not your initial $1,000.
Whoa, okay, I see the appeal here. But that's where the whole risks thing comes in, right?
Exactly. Leverage can be a fantastic tool, but it magnifies everything, and I mean everything.
So if Bitcoin drops 5% instead?
You're looking at a 50% loss on your initial investment. Ouch, right. Remember that time Dogecoin went on that crazy ride?
Don't even remind me, I knew people.
Imagine being on the wrong side of that with like 20x leverage. Talk about a roller coaster you don't want to be on. That's why this isn't just about understanding definitions. It's about really getting the implications, especially in the crypto space, which is, let's face it, already pretty volatile.
And let's not forget about regulations.
Yeah.
Especially here in the US, this whole leverage crypto trading thing is still being figured out, right?
It's like a moving target, for sure. Staying up to date on the legal specifics, as the article mentioned, is super important for anyone even thinking about this in the States.
It's like navigating a ship through a channel with shifting sandbars. You got to stay on top of those changes or you're going to run aground. So let's dive a bit deeper into margin trading. I got to say, the article's mention of margin calls, that sounds a little ominous.
Right, sounds a little scary.
Can you shed some light on those for us? What are we really talking about there?
So let's say you're trading with margin and suddenly the market takes a turn, right?
Yeah.
And not in your favor. As your equity, your safety net, starts shrinking, that's when you get a margin call.
That's like, uh-oh, time to make a decision kind of thing.
It's basically a signal from the exchange saying, hey, you need to deposit more funds to back up your position, add more collateral,
Yeah.
or you can sell a portion of your assets to reduce your risk.
So it's like a safety net, but maybe not a very comfortable one.
Precisely. And, this all ties back to risk management, which in the world of margin trading is absolutely crucial. And speaking of managing risk, I found it so interesting that the article touched on traders using bots, for automated leveraged crypto trading.
Yeah, algorithms making trading decisions. Wild, right?
It really is. Imagine software constantly analyzing market trends and making trades based on preset parameters, like having a tireless assistant working around the clock.
Sign me up.
Yeah.
But that probably doesn't eliminate risk entirely, does it?
You're absolutely right. Even the most sophisticated bots can't predict everything. They're only as good as the data they're fed and the strategies programmed into them and the crypto market. Let's just say it has a knack for throwing curveballs.
For sure. Remember that flash crash earlier this year?
Exactly. Even the most advanced bot would have been caught off guard.
Okay, so back to leverage trading for a second. You mentioned earlier it's not actually borrowing money. But if I'm essentially trading with more than I have in my account, how does that actually work in practice?
That's a really great question, and it's usually where the confusion sets in. Essentially, leverage trading is more about amplifying your exposure to how the price moves.
So instead of buying the asset itself, I'm buying what, like a promise of it?
It's like you're making a bigger bet, but not on owning the asset directly, more like betting on which way the price will go. When you open a leveraged position, you're entering a contract. This contract basically tracks the price of whatever asset you're looking at, like Bitcoin, for example. Your profit or loss. That's determined by the difference between the opening and closing prices of that contract, multiplied by, you guessed it, your leverage.
So using our Bitcoin example from before, if Bitcoin goes up 10% and I'm leveraged 10x, I'm making 100% profit, even though I never actually put down the full $10,000.
Exactly. It's like multiplying your potential gains. But, and this is a big but, just as leverage can amplify those gains, it can, and often does, magnify your losses.
Okay, yeah, got to remember that part.
Imagine that same scenario, but Bitcoin drops 10% instead.
Oh boy.
With that 20x leverage, you're wiping out your entire initial investment.
Ouch, yeah, that's a painful reminder.
It's all about understanding the power, but also the responsibility that comes with leverage.
Absolutely. The article you sent does this great job of breaking down those nuances, especially in that comparison table. One thing that stood out to me, though, was this mention of slippage. What is that exactly, and why should it matter to someone, say me, who's thinking about maybe dipping their toes into margin or leverage trading?
Slippage is one of those sneaky things that can eat into your profits if you're not careful, especially when you're leveraging your trades. Basically, it's the difference between what you expect to pay for a trade and what you actually end up paying when the order goes through.
So like, I see Bitcoin's at one price, I hit buy, but by the time the order is filled, it's actually a different price.
Exactly. This happens a lot in fast-moving markets like crypto, where prices can fluctuate like crazy even within seconds.
Okay, so let's say I'm feeling bold and want to buy some Ethereum. It's at $3,000, I'm using 5x leverage, but suddenly there's this surge and my order gets filled at $3,025. That $25 difference, that's slippage.
It got it. Now think about that $25 difference being amplified by your 5x leverage.
Okay.
Suddenly, you're not starting off on the best foot, right? Might not seem like much on its own, but those small discrepancies, they add up over time, especially if you're trading frequently.
It's like trying to hit a moving target while wearing blurry glasses. Not easy.
And speaking of challenges, remember those automated trading bots we were talking about? I'm curious, how do they handle this whole slippage thing? Seems like even the smartest bot would struggle to perfectly time those split-second price changes.
Yeah, it can't be that easy to program for, right?
Exactly. It highlights one of the limitations of even the most sophisticated algorithms. Bots can be programmed to minimize slippage, of course. They can use strategies like limit orders. That's where you set a specific price. You say buy or sell only at this price. But to be honest, there's no foolproof way to completely eliminate it, especially not in the crypto world.
Right, makes sense. So say I'm ready to give this margin or leverage trading thing a shot. What are some things I should be looking for in a platform? Because let's be real, it can feel a bit like the Wild West out there sometimes.
Oh, for sure. It's a jungle out there.
Help me not get lost.
Choosing the right platform is crucial. Absolutely crucial. First and foremost, you want a platform that's got a solid reputation for security. We're talking two-factor authentication, cold storage for your assets, the works. You don't want to be worrying about the platform itself getting hacked while you're busy navigating leverage trades.
Yeah, that's like leaving your rocket ship parked in a really bad neighborhood. Not a good feeling.
What else? You're going to want to look at the platform's liquidity. This is how easily you can buy or sell your assets without causing a huge ripple in the price. High liquidity, that means you're more likely to get your orders filled fast and at a fair price. Super important when you're adding leverage to the mix.
Okay, so high liquidity, check. It's like the difference between, I don't know, driving on a busy highway versus a tiny one-lane road in the middle of nowhere.
And you know, speaking of a smooth ride, let's talk user experience. A clunky, confusing platform. Recipe for disaster, especially when you're dealing with margin and leverage. You want a platform that makes sense. Clear charts, easy-to-use order systems, and for sure, responsive customer support in case, you ever need a helping hand.
It's like having a well-organized toolbox. You know exactly where everything is, and you're not fumbling around when you need to, make a quick adjustment.
Right. And speaking of tools, the article also really emphasized educational resources. Especially, for anyone who's new to this whole world of margin and leverage trading.
Oh, for sure. You can't just hand someone a chainsaw and say, good luck. Got to learn the ropes first.
Exactly. A good platform should not only give you the tools to trade, but it should also give you the knowledge to trade responsibly. So look for things like, are there demo accounts? Can you practice with, like, virtual money before you risk the real deal?
Oh, that's a good one. Like a test drive.
Exactly. And then webinars, tutorials, anything that breaks down these, sometimes complicated concepts into bite-sized pieces. Even just having insightful articles or market analysis, that can make a world of difference.
It's like having a seasoned guide taking you through, a new city or something.
Exactly. And you know what else? Don't underestimate the power of community.
Right?
Look for platforms that maybe have like online forums, social media groups, places where you can connect with other traders.
Right. Share tips, bounce ideas off each other.
Exactly, because trading can be, well, isolating sometimes. Having that support system can make all the difference, even just to vent about those crazy market swings we all love so much.
Absolutely. There's strength in numbers, especially like you said in the world of crypto, where things can change at a moment's notice. It's funny, this whole conversation, it made me think back to something the article mentioned towards the end about Solulab, that crypto development company.
Right, right.
And it got me thinking, like, as technology gets better, as more players enter this space, are we going to start seeing even more user-friendly platforms pop up? Platforms that make this whole margin and leverage trading thing more accessible, but in a good way, in a way that also incorporates like robust risk management tools and, like we were saying, really great educational resources.
100%. It's like those early cell phones, right? Remember those clunky things? And now look, we have these sleek smartphones that can do like everything. And it's only going to get more intuitive, more user-friendly from here.
It's true. It's an exciting time to be a part of all this. So to kind of bring it all back, it seems like the biggest takeaway here is that, yeah, margin and leverage trading can be amazing tools to like really boost your gains in the crypto market, but you got to be smart about it. You got to understand the risks involved, and you always, always have to keep learning.
Couldn't have said it better myself. It's not just about chasing those moonshot gains. It's about having a solid strategy, managing your risk, and for goodness sake, keeping a cool head.
Well said.
Yeah.
And hey, a huge thank you to you for diving into all this with me. It's been awesome breaking it all down.
Always a pleasure.
And for everyone listening, remember, knowledge truly is power, especially in the world of trading. So keep those questions coming, don't be afraid to explore, and never, ever stop learning.
And if you're ever feeling lost or overwhelmed, there are people out there who can help. Don't hesitate to reach out to the experts. Join those online communities. They can be a lifesaver, believe me, and definitely take advantage of all the fantastic educational resources out there. You've got this.
Couldn't agree more. That's a wrap for today's deep dive, everyone. Until next time, happy trading.